Okay, 3, 2, 1. Good morning, traders and investors around the world. Welcome to this Wednesday edition of Pre-Market Prep here. We got a big show lined up for you. Both Triple D and I are wondering why the heck aren't we down more with some tough talk coming out of Putin last night. Our leadership is defense stocks, and that's not exactly the kind of leadership that you want to see. This is igniting a rally in crude oil. We will take a look at crude oil stocks as well. We got Eric Kroll. He's going to be joining us at 8:35 from the Life Cycle Trade. Talk about IPOs or the lack of IPOs, should I say. Also, I got some breaking news here. Triple D, bring them in here. Give them the breaking news.
How's it going? Can you see me?
Let's see here.
Joel's trying to bring me in here.
Yeah, no.
We have no Mitch today, so we're operating a little bit skeleton crew here, trying to figure it out. I'm sure Joel's got this figured out. He's used this a few times, so bring me in here, Joel. I don't see myself though.
Yeah, because I got to share the screen.
Can you hear me? There I am. I'm on.
Yeah,
I've been on the whole time. I didn't know I was on the whole time. Anyway, I got the coat. Look at the hair. The hair today is pretty intense here, and this is why. This is the hair. This is the COVID hair right here. I knew yesterday I wasn't feeling well at all. Today I kind of feel like a bag of bricks. So I knew this was happening here. It's here, COVID. I've avoided it for 2 years, and finally I get struck by it. So it was bound to happen. What are you going to do? You can't avoid it. It's everywhere. It's in the air. Parents got it. Brother-in-law got it. His kids all got it. It's all around me, and now it is in me.
Oh man,
COVID hair.
You know what?
I
hope we can't get this over the airwaves, because I wasn't feeling so well this morning here. So, but there it is, man. There it is. The Triple D. Stay away. Stay away from Laura. I'm sure.
I don't know how. Yeah, I don't think you can really avoid your family getting it once it's in the house. It's pretty contagious. So, anyways, this is definitely not a false positive, because I've been feeling like crap for 2 days. I went yesterday. I did the test and it showed negative, but then in about 20 minutes, like after it was supposed to be, it showed a faint line, and I'm like, I'm pretty sure I got it, because I've had the flu before, and this one I've had diarrhea and up, all night. I've given you all the details of it if you haven't had it. And basically just bad headache. Feels like a heavy flu. It feels like a heavy flu. So we'll see. Hopefully we can deal with it well. I would be on day 3 because I got sick a couple days ago. So day 3 is when it shows up, and we'll see. Everybody tell me they say about a week. So we'll see. Definitely not feeling great today though.
All right, well, let's get right to the markets here. And rough day yesterday, right? We took out the low of the move by a couple points. We rebounded. I mean, we're both, when we hopped on this morning, we're both a little bit surprised that, with that tough talk, that we're trading up 13 and a half handles here at 38.86 and a quarter. The buck's not helping. The dollar futures, they're up almost 48 cents at 110.42. Your TLT, new lower the move today, but it's trying. It's up 56 cents. As we mentioned, crude in the green by $1.82 with the war talk at 85.76. Gold trying to get back over 1,700, up 12.30 at 1683.40. Silver trying to get back to 20. That's up 37.7 cents at 1956. Bitcoin's up 185 bucks, 19,135. And Ethereum futures, 1346.50. That's down a couple bucks. Triple D, I mean, why do you think we're not down more?
Well, let's give the news here, because if you haven't, if you're just tuning in here for the first time this morning, the news overnight is Putin mobilization of more troops, threatened nuclear action as well against the West. Didn't so much say it, but said he'll use any tactics, which everybody can read between the lines and saying threatening nuclear war here if it doesn't go his way, which is just scary as hell. It's rallied all the defense stocks. So obviously war escalates. You're going to see Lockheed Martin. It's up $8 here this morning.
Wow.
LMT, NOC up $6 this morning. At General Dynamics up 4 points. You also have Raytheon RTX trading up. So you're seeing some significant moves higher here in obviously the defense stocks, and then oil is ripping higher on this news as well. When you get war escalation, it's going to be a ripper and rally in oil. So you'd think that would all add up to S&P selling off. Europe's even sold off here overnight, but the S&Ps are bucking it, and they're trying to get ahead of the Fed here. Maybe they're pricing in that, hey, we know this is coming. We know the Fed's going to raise at least 75, maybe 100, and we're okay with it. I don't know, but it's so right now it's all about Putin. But at 2:30 here, or 2 o'clock, it's all going to be about the Fed. Is it 2 o'clock? I know the conference is at 2:30. The Fed decision, I believe, is right at 2 o'clock.
Yeah, the Fed's decision at 2 o'clock, and then is it going to be another Powell Payne speech or a Powell pump or whatever, whatever. But first, let's just take a look at these defense stocks as they are trading higher. See if there's anything jumping up to us. 4,800 shares. I mean, what more can you ask for Northrop Grumman? You're trading at an all-time high here,
Wow.
50060. Wow, what a strong stock. All these highs here. We did have several highs in this area. I guess you'll just have to just take a look at the pre-market high. If you have a target in this area, the former all-time high is actually under 500 at 496.75. So that could be a little bit of support. It's a breakout for NOC. Let's look at General Dynamics here. That's trading up on 6. Boy, these things are thin. That is not an all-time high, but that's breaking out over 230. The next, what do you have for a daily high here? 233.64 and then 237.41. And then also we will do LMT, and then I want to ask you about RTX here for a second. This is up 823, backed off a little bit. That's just kind of breaking out. I see this 430 sticking out at me, but why has RTX been a laggard? Why do you think RTX has been a laggard in your
There's other things. It's not, and again, you jump in and you think Lockheed Martin is the one you think right away. NOC, RTX is a little bit of an afterthought. I think of the big three defense stocks, it's Lockheed Martin, NOC, General Dynamics, and then RTX is sometimes an afterthought with that. But regardless, Raytheon here is a war stock. It is trading up here this morning. All these stocks really, compared to the overall market, Joel, have been pretty impressive. I mean, you're talking about NOC at an all-time high when you got the S&P 20% off the highs. So that's impressive in itself, and it's telling you. I mean, this war is not going away. It's starting to escalate. If China does do anything with Taiwan, I don't even know what that means for everything. We're just hope that doesn't happen. But I don't think it's a zero possibility that that's happening. That's always been the wild card here. But escalation in Ukraine, because it's not going well here, is not good news either. Not going well for Russia. So obviously they're escalating it. They want to get this done. They're 7 months into it now. So they're going to do what they have to do to try to obviously get control of the country. But it's tough, man. I mean, this is not good news. Not just talking about the equity market, just not good news for the whole world.
Nothing. I mean, macro. I mean, this is something that we haven't dealt with in a long time. But I was just thinking about cybersecurity. This is, I mean, you think that would, I mean, you got Palo Alto Networks traded down. I mean, if there's any kind of war besides nuclear, definitely cyber attacks, PNAW, just kind of hanging out after that stock split. The old traditional, I think it split a couple of weeks ago and it sold off since then. We talk about how stocks a lot of times after splits. CrowdStrike breaking out here. Let's see, 175, right? Is that correct? Yep. You've had a couple highs over 175. Am I missing any of the cybersecurity stocks?
There's Zscaler. There's a whole pile of them there. So they actually, and at a certain point in time, I was saying the cybersecurity stocks will be bought. Cyber CYBR is another one there. So there's a lot of them. I mean, I one thing is we know cybersecurity hacks are not going away either. It's always been valuation for me on all of these things. I just can't pay these nosebleed 50, 60, 80 times earnings, or in some cases, they're not even making money. So it's tough. Okta's another one. There's a lot of those too. But today is about not cyber war, about real
Nope.
war here.
Yeah.
And in 4 or 5, well, in 6 hours, it's going to be all about the Fed. So we
Yeah.
should
Let's
preview, what's happening. And
let's go into
S&P's
it.
interesting yesterday, Joel. We couldn't really catch a rally. And then right at the end of the day, they started to lift the SPY. So right at the end of the day in the last hour. So regardless here, that's where we're at on the S&P. People texting me, I can't find the show. Obviously everybody here, we got a few people that found the show here, but if you can't listen, but I have tweeted it out. So I've got a friend that can't find the show. Easiest way is to tweet that I've tweeted out the link here. Again, Mitch is away today. He's the one that runs it. So we're running it on our own channel for the next 3 days, but we'll be back in the regular channel on Monday. So, but for the next 3 days, we're going to be right here. So you who have found us, congratulations. This is where you're going to be in the next 3 days.
Yeah. Yep. Well, I gave that out yesterday as well.
In the chat.
So man, it's so hard because it's such a conundrum here because we want the market to rally, right? But here you are, you did make a new low of the move yesterday. They tried to press it overnight. We're just not bolting out of here. You know what I mean? And, a lot of times, you see this. I did notice, did you see the triple Qs? Did you see the formation you got there? Believe it or not, with the week, I mean, of course, Apple holding it up yesterday.
Yeah, Apple's strong.
Yep, yep. But someone, I mean, making a stand here.
They
The
are.
trip, yeah.
I bought, so I did, and it was probably Craig Johnson that scared me a little bit yesterday. So I brought my overall portfolio from 50% down to about 42%, and I bought mostly Qs. So I had sold the Qs originally, probably up near the 320 area there.
Wow.
And I rebought Qs there. I bought the Canadian equivalent there at CQQ, I believe it is on Toronto. It just tracks it. So because I want to use Canadian cash to do because I'm Canadian. So, but it tracks it perfectly. So that's what I bought, but that was what I was nibbling into. He also talked me into Canadian solar, which is not going well so far. I bought that Canadian solar at the open and then it immediately fell $1. So I was hoping Craig Johnson, I was just following him on it. It looked like a pretty good chart. I've wanted some solar stocks for a bit. It is a little bit of pullback, but I'm not liking the action from yesterday. I didn't get immediate gratification on that one. The Qs I bought right at the open. They're kind of the same spot I bought them. Actually, no, they'd be higher. They're probably a little smidgen higher because they opened right near the lows, I believe. And then and then they chopped around. They actually had a good rally in the morning and then they came back down. So it's right about where I bought it.
What do you think? Just going for, I mean, instead of just you were too tired picking stocks, you just kind of just go for the.
I think so.
Yeah.
I was looking, I'm like, what do I want? I know you're buying a lot of the same stuff. I had sold a lot of my Qs, like not the ones that I had outside my registered account because I didn't want to realize the capital gains. Like I said, my registered account, I bought Qs like in the financial crisis and my average cost base is $40. So I'm not selling those. I don't want to realize the gain. I have a huge position in that. But I just figured I had registered money and I'd been selling tech for a while in the registered account. So I wanted to get some exposure back just in case I'm wrong. I'm still sitting 42% cash. So if we go down, I'm still pretty comfy. This 50% cash feels a little bit heavy because we have pulled back significantly. I mean, this isn't like, we're sitting near all-time highs. We've pulled back, 400 on the QQQs, 405 back in November, 288. What are we down there? We're down like 30% on the Qs. It is a significant pullback. Are we going to 200? I mean, if we go into a full nuclear war, we might even go lower than that, but it ain't going to matter if we go into a nuclear war. So at a certain point in time, you've got to start nibbling back into stocks. So nibbling back in, not definitely going full bullish, but nibbling back in. It was definitely Craig Johnson that scared me a little bit yesterday.
Yeah. He's
usually right.
Yeah. I mean, he's been good over the years. So let's talk the Fed here for a second. I mean, that's the other elephant in the room. We've always had really big movements. So we've usually had a rally, like a little soft rally ahead of the Fed meeting. And Monday we were all set up for that. But then your buddy Ford, and we'll talk about that in a second. So 0.75 of a point, I think, is what we're looking at, right? That's what the Fed tool is saying, right? I mean, I think they could scare the bejesus out of people if they go a stick. I think they got I got 3/4 of a point factored in. What do you think?
Oh, for sure. They're going 3/4. It's a matter. I think they said 20% chance to go 100. They've been going 3/4 here. I think they stay consistent. I think they go 3/4 again. I think they somewhat stay hawkish. So I think in the speech, he's going to say we're going to continue to raise until we see inflation start to, come into check. There is a distinct possibility here, and we have not talked about this on the show too much, that the Fed is being over aggressive. I know people want them to be more aggressive. I think that is the wrong action. I think federal I think and I think it's common sense. I think economists know this too, is that this when you're raising rates, there's a lag in the effects of that happening. It doesn't happen instantly, like all of a sudden, oh, my mortgage just went up, on variable, or all of a sudden I'm strapped for cash and I'm not spending cash tomorrow. That we've talked about the lag before. So there's a serious lag, and that's showing up in the real economy. I think they've done probably enough damage, raising rates, and 6 months. We're gonna, maybe even less than that in a few months. And I think in this earnings season, that's going to show up here as well. That I think they're slowing the economy down already. We're not seeing it because their data lags. Obviously, we're looking, a month back on CPI, but we're not seeing it. They're looking at lagging data. I think that the real possibility here is that they're being too aggressive with it. So, we have went from, you look at where the 10-year, the yield on that thing. And Joel, I don't know if you can bring it up there, but it's been unbelievable.
What's the equivalent ETF?
Yeah, the equivalent ETF. I mean, I always trade the TLT, and you can really just see the fall off in that. That's the 20-year. So there's probably an ETF for it. Chad, help us out, because I don't trade bond ETFs. So what's the 10-year ETF here? Is there a 10-year ETF? Chad will help us out here. They're all over this stuff. But even seeing the TLT, I mean, look at what it's done. I mean, you've just got bonds have just been absolutely destroyed. 150, and we called this. We call some things right, some things wrong. We called the TLT selling off here, and bonds getting killed here this year. And it just makes sense. If you're going to raise rates this aggressively, it's not going to be good for bonds. Common sense trade has worked very well in 2022. The one thing is, are we getting a little long in the tooth in the sell-off? Craig Johnson thinks so. I can see that argument. I still think there's more pain ahead, or otherwise I would go all in. But I'm not 100% confident there's more pain ahead, and I'm not 100% confident they don't rally off the Fed. If he says anything, dovish.
Yeah.
If he says anything dovish, IEF, chat's all over it. So you can look at the IEF. It's a 7 to 10 year. So I guess that's close. Same thing. I mean, it's been selling straight off. So the yield's been going straight up. It's went from 0.5 to I don't know what the 10-year, what they say, over 3 now, 3.5.
I think I even heard.
I think it's 3.5 now. I haven't even looked at it. Obviously, I'm in Canada, so it's a little bit different story. But it's ugly. So, but just going back, I mean, if he says anything dovish, like even a hint,
like that, what, like
hey, we might slow down, like if we know the market will just roar higher on that. So I think if he stays the course, or if he gets more hawkish, saying we're not seeing any, we're going to stay hawkish, that might sell off on that. But I kind of think we could rally on this. But these Fed decisions are still a coin flip. So
it's you see the decision, right, and then you get the market reaction. But it's really more the reaction has come during the testimony. And like, I wasn't here for the Payne Powell speech, and I guess he wasn't up there very long, right? And but here will be in a extended Q&A. What a tough job that guy has. I mean, trying to maneuver this, going from transitory, right, and now we're using the word sticky, right? So it's going to be an interesting.
The Fed has put themselves in this position, printing money for way too long. Obviously, they had to print themselves through the COVID crisis here, which is still apparently here because I have COVID. Obviously, it's maybe not as bad as we once thought, but it's the Fed. They put themselves into this own. They did this to themselves. Too easy for way too long. Everybody racked up so much debt built on it, and there's going to be some repercussions for that. So my concern is that they don't get inflation in check, that it doesn't come down enough, and all of a sudden, people start to, the economy starts to slow, but prices still stay sticky. You end up with stagflation, which would be an absolute worst case scenario. And then you have everybody, struggling in an inflationary environment. So there is a possibility of stagflation too. So what's that all mean for stocks? Well, it's not. None of it's good news. It's why we're where we are. I mean, again, S&P is 20% off the highs. Q is 30% off the highs. These are significant bear markets, folks. When you get 30% off the high, that's not playing games. So again, we were nosebleed valuations back at the end of 2021. So maybe it didn't make sense. But at a certain point in time, we're going to be to fair valuations. I still think the market is a little bit expensive, but it's not as expensive as it once was. So maybe nibbling. I kind of feel like we could rally out of here, but it's really difficult to call.
I mean, the low of the move. I mean, like we're what that low from yesterday, and I think that's what I had some tweets coming at me yesterday, and people were trying to pick bottoms and pick levels to come in at, and I mean, you could one thing that you're good at, Dennis, is kind of taking your entry and then also taking your licking too, right? If things go on. And I know you did this one in the longer term account to get some more exposure, but at least, I mean, at least with the triple Qs that we're looking at least it's stopped going down, right? And you do have matching range days kind of breaking out of the top of the range. And then like every time I bring these charts up and I look at, the monthlies, and you look at that March 2020 low, and then you look at that January high, and you always knew there was going to be, some kind of correction. You didn't know like how deep it was going to be. And here we are. We over the 50%. We had the rebound rally, and now back on the Fed. Let's just do a few earnings. I
Yep.
mean, does anybody care about Stitch Fix or not really?
No, let's
No,
skip
kid.
Stitch Fix. We don't care about that one, but that's under
General
$5 here now.
Mills.
General
Yep,
Mills, your food stock. People still got to eat, right?
Yep. They
They're
got a
still
beat.
eating.
Yep. The street was at $1. They came in at $1.11, and the sales there were right in line. They raised 23 organic net sales guidance from 4 to 5, from 4 to 5% to 6 to 7%. So that's not a bad rally for GIS. That's a food stock.
Close to all-time highs.
Yeah. We just got a spike in the pre-market trading up to 77.80. I mean, I don't know if your book can see out this far. We're trading at 77.10. That's up $1.69. I think you just got someone perched here at $78, right? You have a couple highs
Logical
over
area
that.
of resistance.
Yeah. But the all-time high is 78.54. And probably had the all-time closing high that day too, right there at 78.45. But every time it's got over 78, it's caught a little bit of a cold. We're breaking out, had a couple highs at 76. So I'll look at that as support. So we'll see what the range is, 76 to 78. Now, a lot of the other food stocks have already reported. So is this having a material impact? And
no, we're
on
at
any
the end of
other
earnings season, and you do see Kellogg's trading higher here on this. So you do see some of them. Walmart's catching a bit here too. I didn't see the headline on Walmart. Walmart's been up all morning. It was actually up before the General Mills report. So something going on with Walmart. Maybe the chat knows, but there's either a rating or somebody said something on Walmart because that's a pretty big move for it. But I mean, the food stocks are defensive. This is your classic, we're going into a possible recession. Let's buy some, something that we know people are going to eat. You think people aren't going to restaurants or eating more cereal. That's not a joke. When it gets tough, you're staying at home, you're eating more, General Mills food. So this is the kind of stock that actually holds up fairly well in a recession. I mean, if a bear market gets ugly enough, they hit everything. But this is the kind of stock that money managers kind of flock into during a recession. But I'm all over you, 78. It's tough to be a buyer here when it's at an all-time high, and it's tough to be a buyer when it's sitting up there at 78. And it's tough to be a buyer when there's cash alternatives. Why do I want to bother with a 2.8% dividend in General Mills when I can sit here at 3.5 or 4% in cash? So cash, the Tina trade again, meaning there is no alternative, is dead. The Tina trade completely dead because there's all kinds of alternatives now. So that's something to consider too. It's why I don't own any utility stocks anymore. I had a whole bunch, sold them all because, again, those are defensive issues, the yield plays. I get yield in cash. Why do I want to be in stocks when I get this much yield in cash?
Yeah, you know what? I saw someone asked in the chat, I believe it was yesterday, and they asking what that actual instrument was that you bought.
Which one?
The one that yeah.
So there's, and again, because I'm Canadian and I've obviously got a lot of Canadian money, If you go into your Toronto Stock Exchange, there's called the ZQQ product. Again, Canadian saying Z, it's a Z, and obviously in the US. But if you go ZQQ, it tracks. It's just a tracking index for the Qs. So the NASDAQ 100. So it tracks it. If you put it on the chart, tracks it pretty much perfectly. So I'm just buying that because I'm Canadian.
Okay.
If you're in the US, you'd have no reason to buy that whatsoever. But because I have a lot of Canadian money, I just buy the ZQQ. It's the same thing as buying the Qs. It's at $85 right now, all-time high 121. You can do all that math, and it pretty much adds up. So
Okay.
hedge to the Canadian dollar.
Okay. And then just real quickly to alert our traders, investors, after the close, steel case, that's not a big stock, that's more of a furniture stock, but also after the close. And
The home
yeah,
builders.
the home builders. Yeah, yeah.
Yeah.
Let's first go to just do a quick preview here. KBH is due to report. Low under $28. Nice move up here. You have relative strength has been okay in this one ahead of the report because we definitely went lower this week, but that got hit on the CPI data. I don't know, got a high at 20. Wow, that's up at 29.42. That was your high on Monday. And then on the downside, if they hit it, multiple lows in the lower 27 handle here. I see one or mid 27 handle. I see 1, 2, 3, 4.
There's just a lot of bad news, Joel. There's a lot of bad news priced into the home builders. I don't know how bad it can get. You look at the P's and you say, oh, they're so cheap. But again, it's the first thing. People aren't building houses when they're starting to struggle for money. So obviously there's contracts. They're continuing to fill those contracts. It takes a while to build some of these houses, but are they getting new contracts? That's kind of the question going forward. But again, a lot of bad news priced into the home builders. The stocks have come off substantially. Lennar's high 117 down to 76. KB Homes, was over $50, been cut in half. So you got to ask yourself at a certain point in time, is all the bad news priced in? I mean, KB Homes back to where it was in 2017. So maybe. I mean, that's Craig Johnson's. That was pretty much his argument yesterday. It wasn't like, we threw out a lot of bearish stuff at him. And he's just like, a lot of stuff has really been hit hard. So, we're oversold. So his argument is oversold. And you know what? We are to a certain extent. So there is an argument there. If we get any type of good news from companies, they go higher. Everybody's expecting more bad news. Like everybody's expecting a pretty bad earnings season. If we get okay, like we did last season, we might be all right. So that's the question. Joel, you there? Joel, you're on mute, I think. Anyways, Joel's headset just went out on him, but I'm still here, so I can keep talking with you. Let me know if you hear me okay, chat, because Joel, for some reason, has struggled with his headset here. He's trying to get it back here.
I'm back. It has to be at least one hiccup here, right?
Ha. Okay, Joel's back.
Yeah, no, that was a nice little rant there. On the home builders, and you guys are just tuning in this morning. Just at the top of the show, yeah, Triple D is having a real bad hair day too.
Again, I'll show you the reason for the bad hair day. This is called COVID hair. COVID hair.
There is
COVID hair. If you're just tuning in,
there is the COVID test.
I was up all night. I'm up and down, and it's kind of. I feel better than I did last night, but I definitely feel like I got the flu. I feel like a heavy flu. That's what it feels like. So I think before I thought I had it, this is heavier. It's different, stomach. It's a little bit of everything. It's like a little touch of everything. So not fun.
Should we haven't taken a look at our COVID stocks at all, or we haven't taken a look at our reopening stocks? And I guess
the trade is over. So, we're bringing up stuff from 2 years ago, reopening, non-reopening, that doesn't matter anymore. Stay at home doesn't matter anymore. Now it's basically, you're looking, obviously the war stocks going back to the top of the show are moving higher here today. Cruise lines, it's not so much that this is reopening. This isn't COVID hitting cruise lines. This isn't, why, the stocks aren't rebounding. This is potential recession. But, with that being said, NCLH, just had that stock chart up here. It's held up fairly well in the last 3 months. It didn't sell off in the recent sell-off. American Airlines, not so much. I'm just going through the cruise lines here too. RCL has been holding up very well. So that's interesting. Is this just another selling opportunity? I tend to think so because I think it's going to get ugly. But they've held up well.
Oh yeah, RCL there, kind of trading at the top of its range. I didn't realize that got back up into the 50s. Someone asked about NCLH a little bit earlier in the show. I mean, easier to find that support at 15. You see resistance. The last three highs in the 1580 area. Triple T, we're getting another pop here. Be careful on those offers. They are
Yeah, for
out
sure.
there. They are out there lifting offers despite the despite the tough talk from Putin and an impending interest rate hike. So
Yeah.
man, oh man, this market makes it makes it difficult. Just kind of have to trade what's in front of you. We touched just a little bit on oil stocks, and we should probably take a look at these, get back down to the lower 80 handle. It got down to 81.73 a couple days ago, but right back up. Dennis, a couple days ago, you talked about your Oxy. Is this one you're just going to set it and forget it,
I
or?
think so. I had hardly any oil stock, so my oil stock exposure is very low. I like the Buffett put. I think he continues to buy it. I think there's an outside chance he ends up buying the whole company. So it's one that I picked on. Obviously, all the oil stocks move together to a certain extent. It's come off the highs here. So yes, I'm still long Oxy in the long-term portfolio. It's exactly where I bought it. I bought it 65. So we got the
60.
little Buffett pop 2 days later, and then it's pulled back. So it's exactly where I bought it. I don't know. You could argue it. It came from 20. So if oil starts to, retreat, could we go back to 40 or 30 on these oil stocks? It could happen, but I don't think we're in that environment here where oil is all of a sudden just going to crash. And I want a little more oil exposure. Again, there's two hats I'm always wearing. I should be wearing a hat today with this really bad hair, but there's two hats. I'm wearing an investor hat and I'm wearing a trading hat. The trading hat, is telling me kind of want to be long oil stocks. And the investing hat saying, well, I don't have a lot of oil exposure. Maybe, in this recent pullback, I should get some. So for two reasons, I'm long Oxy right now. Might be wrong. It's okay. As a long-term investor, even as a trader, you're going to be wrong lots of times. So far, I haven't had immediate gratification on this one, but I like the fact that I'm with Warren Buffett and not against him.
Yeah, yeah. I mean, he did buy a little bit more, so he's up to 25%. I don't think he's ever had that big of a stake in a company without actually taking it out. And it's interesting because he started buying this early. He started buying this to help him out. What was it, Anadarko? That they bought. That was a while ago. There was a big battle. I know he did the financing. He held this one, man. This is one loser that he held on to, kept on adding on to it. I mean, look at all those monthly highs. A little bit better than the oil chart, the actual oil chart, because that's been down 6 months in a row. But take a look at Oxy. You do have three highs right at that 65 area. Giving Triple D a little bit trouble, but we catch a bid above 65. 90 cents is a pretty big move for this one. Your next daily high comes in at 66.14. So I am going to stop the screen share
I
here.
cannot figure out why we are rallying this hard right now. So I don't know. This
Go
market does
figure.
funny things. Like you get escalation of war, and
Look at
maybe
this.
it's a bit of seller exhaustion. To Craig Johnson's point, he made some good points this day. We may be at a point of almost seller exhaustion where a lot of people have sold. I still see, some bullishness out there, but he sees a lot of bearishness. I was asking other people, and we asked Christian Fromhertz on the show yesterday. He's like, I see a lot more bearishness too. It's a bit of selective perception. I mean, you go on Twitter, you can look, you can find what you're looking for. So it's sometimes a hard thing to gauge. But very impressive market today to be shrugging off the Putin threats, to be shrugging off the sell-off over in Europe, because there is a little bit of a sell-off over in Europe, and to be rallying, 20 handles in the wake of not really any good overnight news here. It's very
Bad
impressive.
news. Bad news. And a lot of times, what do we say? When a stock or a market goes down on bad news, then that's a good sign. Florida getting a little optimistic about only a 50 basis point hike, and I don't know. I think that might spook people that the Fed's getting too soft again. But just looking for any kind of
there's not going to be a 50. It's not happening.
Not going to be
So I do believe you're going to get to 75 again. It's about the tone. It's about the comments, even in the conference call, which will obviously happen 30 minutes later. That's going to be important as well. So it's anybody's guess. But again, we go into this Fed announcement very oversold. So that's the consideration, is when you come to something oversold, say anything remotely good, they will rip the face off the shorts. So that's why I add a little bit to my long-term cues. I wasn't comfortable being 50% cash anymore. Brought it down to 42% cash in the long-term portfolio. Staying market neutral from a trading account going into this event because it still is a bit of a coin flip.
All right, are you going to be able to? Are you going to be able to trade that number? Or are you just gonna just let it shake out and
Oh, we'll see. There's always
yeah.
usually some chop, but we got Eric in the background. Let's bring Eric Kroll on
Yeah,
here.
Eric Kroll from the Life Cycle Trade, joining us here on Pre-Market Prep. How you doing today, Eric?
Well, I'm doing great. How are you guys doing? Dennis, sorry to hear about the COVID. I tested positive 2 weeks ago. Doing better now.
Everybody is getting it that didn't get it, I think. Like I for 2 years, have you had it before? Is this your first time with it, Eric?
First time with it. I had been vaxxed, had been boosted, and first
Yeah,
time
I did all the vaxes and the boosted too. I mean, everybody, like my parents who basically don't leave the house, got it. And when they got it 3 weeks ago, I was like, I'm dead, because we haven't had it yet. I've got the COVID hair. I was a joke this morning, but I was like, I was up all night with this COVID thing. I'm like, I'm not even gonna comb my hair because I'm gonna show the COVID hair here today. So my hair is always crazy, but it's extra crazy here today. So, but Eric, I mean, we're not getting away from this. Everybody's getting it. It's in the air. It's literally everywhere. There's no fighting it anymore. I stayed in hiding for the first year and I've given up on that. So, but let's bring this back to the stock market, because we're going to all get through these COVID times, hopefully. And let's talk about IPOs, because that IPO drop off, Eric, that chart you're showing is amazing. You know, you look at how hot 2021 is, and it's like nobody doing IPOs in 2022. And it's not like they all went to SPACs. I mean, the SPACs have backed off here too. So it's just like, there's no new issues.
You're exactly right. It's like the IPO market has COVID. It's you have about 10% of last year's IPOs this year. We're down to 92. And if you look at that chart, that's the lowest it's been since really 2009. And maybe we'll finish up somewhere over 100, which is, just terrible. It's a terrible market. Obviously, companies don't want to go public when the market's in bad shape, and they're just shying away.
All right, so we look at this. Have you ever seen a decline like this? I mean, you had what, a good climb from 16, 17, 18, 19, nice bump in 20, big bump in 21. Then I'm looking at the 09 cycle there. That was pretty much three up years in a row. Have you ever seen such a precipitous drop in the IPO market?
It's never happened before, and some of it was the overheated IPO market, especially with the SPACs in 2021. Of those 1,073, I think it was 450 of them were SPACs. So it's never happened before. I've never seen it like this. It just shows that it was just crazy speculation rivaling the internet era of the 1999 2000.
Do you think that this is having a negative impact on some of the big banks? I mean, as far as the income coming in from that, a bit, the underwriting.
I'm sure it has. I haven't looked into it, but I'm sure Goldman Sachs, the other investment banking firms, their investment banking income is way off because of this.
Okay,
that's a big consideration what you just mentioned there, though. You think about all the banks, and the banks have been getting hit here. You think about the investment banks, and you're like, oh, how can you go wrong? Goldman Sachs, Morgan Stanley, they're significantly off the highs, but Eric, I mean, there's a point here to be made. Like, their investment banking has probably not had a great year.
Oh, it'd be great to see what their overall income and is in general, and then compare it when you look at the different business lines and look at what it is for underwriting. And I'm sure it's just got to be just dying.
All right, so here we are. Here's the reason you don't have IPOs coming to the market. They're even under. We're having a down market, but they're even underperforming the market. So discuss this chart that you have up here for us, comparing the Renaissance IPO index and the S&P 500 going back to November of 21.
Isn't that amazing? you're looking at, we all know the S&P's down, and you're hovering around down 12 to 13, 14%. But the IPO index from Renaissance, 50%. I mean, this, when you look at this, how could you attract any investor, right? Who would want to be attracted to an IPO? Now, one of the biggest IPOs in Europe in years, and really in the last 11 years, is Volkswagen having an IPO for Porsche. And that's going to try to raise $10 billion in the next week or two. It'll be very interesting to see how the market treats that, because you're looking at a market for IPOs in general, they underperform. And one of the biggest in 11 years is coming out. And I'm really curious to see how it's going to be handled by the market.
Just going back to a stock that I own, definitely own at a higher price. Intel, they have bought the Mobileye years ago, and boy, the stock got a nice pop on that. If you hearing any rumblings about that? I mean, with the EV stocks have been extremely strong. With the Mobileye, you hear anything along those lines? I mean, trying to unlock some of that value.
I have not heard anything about that one at all. So
Okay.
yeah.
All right. Let's move on, right? There's got to be something that's doing okay out there, right? Best performing IPOs going back to June 16th, 2022. Of course, using the qualifier here, stocks that trade $20 million a day in average daily volume. Let's talk about some of these, and looks like some healthcare to me, huh?
Yeah. Well, my friend and co-author Eve Bobach put this together for us, and she's very good at looking at all the positive things. And so she said, well, what has gone up the most since like the market bottomed in the middle of June? Now, the top two, those are special cases. That One Life Healthcare, they were being acquired by Amazon potentially. So that got a big pop, and it's been flatlined since. And Signify Health, that was because of an investment or potential partnership with CVS. So if you forget the first two, and then Karuna Therapeutics, which is a biotech, which had a great announcement about potential use for their drug, you start going underneath those three, and you say, okay, well, Shockwave Medical, that's made a great move since the market bottom, and Snowflake and New Holdings, which is, I think, a Brazilian company, and Coupang, which is a Korean one. But you look at Uber and Cloudflare, now you're looking at, okay, the market hasn't done very well since June. It's up a little bit since the bottom. But there's some stocks that have performed very well, which were recent IPOs. So there's a list of stocks that, many of them are coming off a bottom. And you're looking at, you're trying to recover from a big correction, but they are outperforming the market.
Yeah, and you had the May bottom and ARKK, right? So it's to see some of these stocks. I mean, the percentages definitely are looking good, but some, like, you look at some of these stocks like Robinhood. Yeah, it's up 45 or 49%, but I don't know where the high was, like around $80 or something like that.
Right.
Do you, when you see, you have the different cycles, right, in the life cycle trade. Are these continuation moves here? Are these dead cat bounces? I know there's a bunch of individual things, with some of it being biotech and whatnot, but like historically, when these stocks have gone through these different phases, can you talk about any of these that still might be in a phase where there could be a continuation move to the upside?
Exactly. I'd be looking more at the ones that have not gone down 80 to 90% and have potential dead cat bounces. I'd be looking more at the ones that have gone sideways for a long time in their due diligence phase and look to be maybe starting a good advance. And I'm looking at things like, there's a couple coming up on the next slide, but on this slide here, I'd be looking at Cloudflare and potentially Uber and Rivian. Those are companies and Airbnb, that they didn't have the huge run up, then followed by the precipitous decline. They had some run ups and a decline, but maybe now they've been going through a longer due diligence phase and appear that maybe they have the potential to go on for bigger gains. So I wouldn't invest in any of them right here, but I'd be watching the ones I mentioned closely.
Looking for pullbacks, right? A little bit of weakness. I mean, do any of these companies make money or make good money? Have had consistent quarters, back to back quarters of making money, or still some of them still in the the money? I see you shaking your head there. I think
Unfortunately, most of them have not made a lot of money yet. They have great sales growth in some cases, but like in the case of Airbnb, I don't know if they've even had positive earnings yet, but great sales growth. Uber the same way. We'll have to see.
okay.
I'd be more interested in the following two right here. Global Foundries. If you look at this one, it's clearly in a due diligence phase. It's gone sideways. It had one spike in earlier this year in March and came back with a bad market and has been going sideways. It had a nice run up beginning in July, and now it's forming a consolidation and it's bouncing off its 200-day moving average. I'd say this is one. It has great growth and good sales, so it has positive earnings. I would definitely be watching this one. I'm not in it, but waiting for the market to get better. That's the biggest problem, is the market is not good. And with a great, with a better market, these kind of growing companies do better. And then Driven Brands, they are a company that owns Mako and Meineke and a couple other, like a car wash brand. And this one tried to break out just a couple of weeks ago, came right back to the 50-day moving average. But look at that nice due diligence phase, and you can see at the end of the phase here, it's got a nice cup. It hasn't forming a good looking handle at all. It's an odd looking handle at this point, but this would be one I'd be watching for a breakout. But they have good earnings and they have good sales, so they're making money and they're in a nice due diligence phase.
And just what about the interest rate environment? I mean, that's obviously another thing working against IPOs. You think you're not gonna get to see a boom here until you get a little bit of a turn in inflation, or at least some kind of a letting up of interest rates?
That's a good question. I don't know how much interest rates affect the IPO market and IPO stocks specifically, as much as just the overall market environment. And if we can see the overall market feel better about what the Fed's doing at some point, then I think it takes it's like these maybe, like basketballs being pushed underwater or beach ball being pushed underwater. And then if some of that pressure gets off, they can lift. And we'll have to see what they do with interest rates. I mean, 75 basis points today or 100 basis points potentially, and then another one maybe in November. And then we'll have to see, right?
Right. It's a tough environment. Definitely is a tough environment for the overall markets. It's a tough environment for the IPO market. So Triple D, any more questions here for Eric? If not, we can let him go. You
Muted.
might.
I'm muted. That's a Zoom. I'm not used to the Zoom thing again. So what about Zoom? Do you have you still following that one? Obviously,
I do.
Was one.
Joel, can you pull that one up or pull up Zoom?
Yes, I can.
It's funny. I'm just using the product for the first time in a while, because on our other site we use Zoom. On the other site we use StreamYard. But just curiously, what are your thoughts here on Zoom? Because this is a Kathy stock. Obviously, it's been just beat up. Value trap, because they were making significant amounts of money, but stock continues to leak here. What are your thoughts on this one?
My thoughts are I wouldn't touch it with a 10-foot pole. I mean, look at that monthly chart. It's devastating. And you look at the daily chart right above it. I need to see some sort of base, and then form some sort of cup or whatever, and then some sort of
stop going down.
It just stocks. It's in a trend. It's a downtrend. It just looks terrible.
you can spot that trend. And just I'll just ask you about a couple other ones that are. A little bit been around a little bit longer, but definitely Rocket Mortgage has been hurt by Rocket Company's been hurt by the rising interest rates. Also UWMC, same kind of thing.
Value trap here too.
Yeah, are you looking at these at all?
No, I mean I have them in a drawer where I pull them out like once a month. I call it the junk drawer. And you take a look at it, and you hope to see something good coming out. Pull up Airbnb, ABNB. That one is something I still watch. I have high hopes for, and it looks a little better, certainly on a daily chart. You look at the monthly chart, it's certainly off the bottom. I'd like to see it, form a little bit more of some tighter consolidation and then break out. It's certainly more off the bottom than I like, close to the bottom than I like, but the daily chart doesn't look too bad up there.
Okay. All right. We're going to wrap things up. We've had Eric Kroll on this morning. He is the co-author of The Life Cycle Trade. Like when I emailed you, I'm like, well, what are we going to, what's there really to talk about, because I know the IPO market has been stagnant, but we got you back here. Great to see you, and we'll get you back on again soon.
Well, thanks. It's fun to be here. And like I said, let's watch that Porsche IPO and see how the market treats it. To me, that's a test case for other companies.
That's your indicator. All right. Thank you very much, Eric. As I said, we'll have you back on again soon. Boy, oh boy, do we even want to take a look at any of these SPACs at all, Dennis? I mean, when's the last time we talked about
Airbnb is interesting though to me, and I've talked about this one before, and I do believe this one that's going to stick around here, and I think they make money here now too. So if not, they are close to break even, at least on cash flow basis. But I believe the cash flow positive here now. So it's been holding up fairly well. I've talked about buying this one before. Still nosebleed valuation keeps me out of it. But some of these Kathy, and not that this is a Kathy name, but these nosebleed valuation, tech companies here have held up fairly well. They had their bear market back in April and May. They had their capitulatory event, and they haven't breached those lows at all. And those are the ones that have been holding up. I mean, we've even talked about ARKK. Hasn't even close to its May lows. So, right. We've been holding on fairly well. Are we in trouble, eventually, and we're going to go down and retest some of that? It's possible, but those stocks have been so beat up. It was seller exhaustion all over those things in May. And that's why, the sellers really haven't reemerged on these stocks. It's been the value. The last couple of weeks, the sell-off has been the value names, the caterpillars, like the ones that, lower PEs. It's been those names getting hit. It's not been the nosebleed tech stocks.
Yeah.
Eric, you're still in the background. I didn't even know Eric was still there.
Yeah. Well, Airbnb has had 3 positive earnings quarters over the last 4. So it is definitely one that I, am more interested in because of that. But yeah.
All right, Eric. I didn't see you sticking around.
You can stick around. He likes us. Yeah, we like Eric.
Thanks for joining us today. Really appreciate it. The S&Ps did get over that intraday high from yesterday. That was 93.25. We got to just a few points above that. Your true high from Tuesday, that was up at 36.25. The way this market moves around, I'm sure that we could easily be seeing that in today's session. We'll look at it versus the SPY. Dennis, I just wanted to talk about the Ford fallout here. And that's got to be one of the worst days for Ford that I can remember in quite some time here. Yeah. We do have some gap fill traders here that did make a mention here where you had a gap coming back to fill from August. I mean, you got to figure, since we haven't been down here in quite some time, you think the bids are going to be building at 13. Nice round number like that.
It just hits so hard. I mean, you caught everyone that was saying, okay, well, here's a good opportunity to get in the stock with a P of 6 or 7. They did reaffirm full year guides and they just hammered it. So, I mean, you've got that candle catches everyone. So any type of a rally is met with more sellers. We've seen, what's happened with FedEx. We've seen has a big gap down day and can't sustain any type of a rally. So we've just seen this before. When stocks get hammered like that in a day, they don't bounce right back. They rarely, in 2020, yeah, they were buying dips and they were bouncing them, buying them back. This is not 2020 anymore. This is 2022. And you disappoint the street. The street does not forgive you very quickly. So Ford, I sold my GM recently. I think these are no touches for a bit, especially if we're going into a recession. I keep saying that. It's the reason I sold my GM, a few weeks ago. Was that if I think we're going into a recession, I want Ford or GM. Those are not the stocks that don't going into a recession.
No, man. Wow, man, that thing just got absolutely ridiculous. In January, they're saying what, the 25.87. I mean, I think that's going. I don't know when that going back to. And then what was your COVID low here? Your COVID low was just under $4, right? So four to what I say the high was back then. I mean, are we giving back 4 to 26, 22, 11? So you lost it overall 50%. Look how it hung there on the way back down here at 15. That was 50% of the whole move. Let's take a look at GM real quick. Falling with it too. I mean, I think everyone was kind of optimistic at first because they warned for Q3, but they said they were good for the full year. And I think everyone just kind of said, how you gonna be good for the full year with if you're missing and it's based on supply chain?
Yeah, they call it the bluff. You can say what you want, and Starbucks again. I'll go back to that one. Saying, "Oh yeah, it's all teddy bears and rainbows, and we're going to beat guidance." I want to see them do it because I think that they say what they want to say. They're hopeful. I think that was a hopeful, from that PowerPoint that they had when the stock had the big pop, but I don't see it. I don't see everybody going out and buying $5 coffee if they start getting tight for cash here. So I think I think they're going to be wrong. I think Starbucks is eventually not going to hit their guidance.
Yeah, how long ago was it that they came out with that good news?
5-6 days ago. It wasn't long ago. It's back down. It's kind of where it was like 89 and popped to like 93, 94 on that.
Yeah.
And then it's pulled back a little bit here. I
And
don't know. The stock's held up well though, so you can't argue it's an uptrend. I mean, it's a recent uptrend, but an overall downtrend. This is so tough. I mean, we try to make market calls on this show. We try to come in, you're making market calls. I'm very much on the fence because I see everything to be bearish about, and then I do see an oversold market to Craig Johnson's point yesterday. So I'm like, is a lot of this stuff priced in? Some of it is. Is all of it? I don't know. If China invades Taiwan, Katie bar the door, we're going back down to the lows. That might not happen. And maybe this Ukraine-Russia situation escalation, obviously it ends in nuclear war. We don't have to worry about anything anyways. So I think the market doesn't care that Putin's, once again hinted that he wouldn't be against, using any measures possible, especially even against the West. But again, we're going to nuclear war. Stocks don't matter anymore. So, I mean, that's why, that analyst that came out, we mentioned that again, last year. So there's a 10% chance of a global, nuclear war and basically ending civilization. And 10%, that sounds pretty horrible. But at the same time, it's like, well, does money matter if that's the case? No. So you might as well invest in stocks. And that was his final point. Might as well buy stocks anyways, because if it ends, it doesn't matter. So if it doesn't happen, stocks could go higher. So market doesn't appear to be scared of nuclear war at this time.
All right, let's just real quick here. We're coming up on the top of the hour, and we do have a meaningful ratings change here. Estee Lauder. Goldman Sachs liking Estee Lauder here. I guess people going back to the office here. Upgrades Estee Lauder to buy. Raises price target to 303. Up 569 here. A couple thousand shares have traded. I see what maybe you look at this 250 area, 245. Nothing really there. You're trading at 245.19. I guess it's one of those things, with the market, you get a strong market. They'll continue with this one. But I guess maybe they took a look at the Alta chart, huh? And
and Alta has one, and we've talked about this company before, which is just one of the best run companies out there. Estee Lauder, I mean, they're making a contrarian call here. Stock is off significantly from the highs, 374 down to 239, and they're obviously, they're trying to.
I like this one.
I like the contrarian call too. I wouldn't fade it because it's beat up. It gets a vote of confidence from an analyst from Goldman Sachs, which is one of the analysts that carries, if not the heaviest. They got a lot of weight. So they got, people follow their opinions. So Goldman upgrading it will get some attention in the media, just like we're talking about it here. I think it'll be a buyer pullbacks.
Okay. All right, Dennis, we are coming up on the 9 o'clock hour, sitting on 18 and 3, 19 handles and gains here at 91.75, just off that pre-market.
And we froze up. Joel froze up. Can you still hear me? You can still hear me, so I'm still here. Joel is frozen up again. Joel definitely having problems with his internet today. I'll carry you for another couple minutes. Hopefully, Joel's got another guest coming up here. So the show is going to go on. So please don't leave here. Actually, Joel's carrying the show till
Hi,
9:30.
are you?
Joel, I don't know what's happening with your internet here. You got choppy internet. You got Rogers? Did you switch to Rogers?
Hey, how you doing, man? That happened to me. That happened to me 3 times yesterday. I think I may have to switch my internet
I think you
service.
must have switched to Rogers recently.
Yeah,
This is
yeah,
Rogers. This is what
yeah.
happens. Unreliable.
Well,
So,
at least I didn't have to do anything. At least it came right back up for me. So, all right, Triple D.
okay, I'm going to try to feel better here. I'm
Yeah.
going to try to get some rest here today. I feel better than I did last night. Last night was a bad night. And I knew when I did the test this morning, it was going to be positive. It was like, you don't feel like this. So when you get this COVID, you realize that, no, this is, a little heavy. This is a heavy flu. So it didn't feel like, your normal stuff. I'm not really congested or anything. I'm just like, feel really weak, very weak, like a flu. So
All
anyways,
right.
okay.
All right, I'll
The show must go on. I got to go trade. Joel's going to stick with you. We got some special guests coming up.
Yeah, and we have a guest coming in right now. This is on Wednesdays. I usually do a segment Wednesdays with Wedbush, and we have Alicia Reese over joining us today, and nice smile here on this Wednesday morning. Good morning, Alicia, and
Good morning,
hi.
Joel.
How you doing? Nice soft
Doing-
voice, man. I think I say that to you. I say that to you every time. Every time that you come on, I probably say the same thing to you. But you got a tough sector to follow here. The associate vice president of equity research here, and following the entertainment industry along with our buddy over there, Michael Pachter. But let's just talk about some of the latest industry reports that were published on the media and entertainment sector.
Sure. So we haven't recently updated our movies reports, but let me just give you a review of where we are.
Okay.
Earlier in the summer, we had expected a nice boost in the summer, and that happened. We expected a lull at the end of the summer, in September, and that's where we are right now. The shares have sold off for two reasons. I think more recently, one, you have a tough economic situation, so they just get kind of thrown out with the bathwater, even though historically theaters have performed quite well during recessions and inflationary environments. On the other side, you have just a slow box office. It's not getting a lot of attention right now. That being said, our Q3 estimates are roughly in line with where the box office is shaping up. We have a couple, small titles coming out over the balance of the quarter, and that we think it'll end roughly in line with where we were. And then Q4 is looking really nice, really strong. I think that really rebounds nicely. And then 23 is looking good. The film quality in 23 is really strong throughout the year. The only question we have, and the only thing that will, get the 23 box office to really rebound to pre-pandemic levels, is if we get that volume back. And one of the things we saw recently that was encouraging was that streamers didn't buy as much content at the Toronto Film Festival recently as we had expected them to. They typically buy quite a bit. And with them not buying as much, that means more films will probably make it to the big screen. And you'll have, some titles playing for shorter theatrical windows. And that's fine because the theaters will pay a lower film rent on those films. So all in all, that bodes well for increased volume on the theatrical film slate.
Okay. All right. So let's take a look at some of these issues. It's been much harder to follow AMC since they did the offering and the two different shares. So you just got to look at them and add the two prices together. So
it was $18 at launch for AMC, and now combined it's $13. So that's on the first day of trading of apes, they lost $800 million in enterprise value, and now they're down 2.6 billion in enterprise value since they launched the ape.
Okay. All right. Let's move on to some of these other ones. Cinemark here, just had been in just like a trading range, 15 to 20. Going back, really, spend very little time under 15 and not much time over 20 here. Hanging out near the lows of the move. Why don't you talk about Cinemark and talk about your rating and the prospects for 2022 and 2023.
Sure. So for Cinemark, we have a $22 price target. We think that's neither conservative nor aggressive, really, in terms of the valuation multiple. The historical valuation multiple on Cinemark has been roughly 6.5 to 8.5 times, where to 7 times. We think they're currently trading at around 5 times. So I think what gets that multiple higher is just seeing the box office pick up again in Q4 and seeing the volume pick up, like I was mentioning earlier, in 2023. Another thing that could really get the stock moving, I think, is a resumption of screen growth in Latin America. The screen growth is really tied to mall development in Brazil in large part, and that's just come to a standstill over throughout the pandemic. And they're going through an election there right now, so we'll see where that goes. We're kind of keeping an eye on that for Cinemark, but we think the box office is shaping up well, and Cinemark is well positioned within the market. We think that they've sold off more than they should have at this point. We remain outperform on Cinemark.
Okay, outperform, and what was the price target there?
22.
$22. Okay. I have a chart up of IMAX here, and that had a nice move from with the market from 1450 to 1650. We pulled back here to the $15 area, hopefully trying to catch a bid with the rest of the market. Any comments on IMAX?
Yeah, we're still pretty bullish on IMAX. I think the only the first thing that I would point out with IMAX is that it shouldn't necessarily trade right in line with the other exhibitors. It's an asset light model. They don't have a bunch of debt, and they don't have theaters. It's basically a licensing model, and they license their tech and equipment and screens, and they only play blockbuster films, and they only play 1 to max 3 weeks, mostly 1 to 2 weeks of their content. And the blockbusters are what's doing well, and people are shifting their viewing patterns toward the premium large format screens. The only point of concern, I think, with IMAX right now is China. They have a third of their footprint in China, and that's growing. And China is just in a bit of a lull right now, as they, continue to go after their zero COVID policy. And that's really had a negative impact on theatrical in that market. All right. Yeah, we're just going to keep an eye on that.
Okay. And let's go to some other stocks that you have a buy rating on here. I'm looking at Logitech, and wow, had that big bump up over 52, but gave it back along with the market. The monthly chart's not looking so good here as well. You've as of August 18th, you had a buy rating on it, and price target of $83. Is this kind of like a back to work kind of play, or what are the potential positive catalysts coming up for Logitech?
So Logitech has a positive catalyst that most other of its competitors don't necessarily have, and that's primarily that the return to work being hybrid, and that just means that you're going to have PC peripherals at 2 locations and not 1, and the upgrade cycle will occur roughly equivalently to pre-pandemic, maybe a little less frequently, but not tremendously. We recently did a survey of IT managers across the US, and the results from that basically said that with the hybrid work, they do intend on upgrading peripherals at both locations. Also, video collaboration. I think we're still in the early stages of video collaboration in the US, and we'll see a lag on that in Europe, given the circumstances over there. We're going to see a big expansion, I think, of video collaboration over time in offices, mostly small meeting rooms, not the big office rooms, conference rooms. I think those have largely been outfitted, but they'll be upgraded, and Logitech is a prime candidate for that. And all those small meeting rooms, I think there's a ton of potential there that Logitech can benefit from over time.
Okay, and probably going along those lines here of restocking up, Turtle Beach Corp trading here around the just under the $8 area. Talk to us about your buy rating on Turtle Beach and positive catalyst coming up.
Sure. So they had an activist investor get involved in the stock, and they have just passed a date that they can vote in more board seats and effectively replace the CEO. Their intent has always been to sell the company. The Turtle Beach has recently gone through an extensive process to find a buyer, and the CEO had recently said on their last earnings call that they had over 100 interested parties, all of them declined. So the stock really dropped off on that news. I don't think that there are no interested parties, but I do think that the timing was really difficult because, you have the retailers just have an overabundance of inventory going into the holiday season, and that's just a tough to be in for any consumer electronics companies.
Okay. Now, I don't know. It doesn't look like any of these stocks in the streaming wars. Let's just talk about that for a second. Being asked about who do you see as best positioned in the streaming wars? Bring up the charts here real quickly. I'll comment and then let you go back to them and comment. Disney had that nice earnings pop. Came back to fill the gap. It's just kind of hanging out with the market. Also involved in the streaming wars. Was asked about this one yesterday. Paramount Global, WBD. That's the spinoff Warner Brothers Discovery. That's had a real hard time. A trading range between 12.50 and 13.50. And then I guess you could go Comcast in here. That's been hit hard, attempting to rebound. Netflix has been one of these stocks that is just, I know Michael Pachter covers that one. Would you like to make any general comments here on the streaming wars or anything anything in some of these individual stocks?
Sure. So we don't cover any of the ones that you mentioned except Netflix at this time. But I'm not going to talk about the price ranges or a target. But as far as the streaming wars are concerned, Warner Brothers is on HBO Max has had an advertising component for a while. Discovery has obviously, Paramount has one for their service, and Comcast, of course, on Peacock, and Disney is coming out with an ad-supported version in early December. Netflix has stated that they plan to in early 2023. Lots of marketers have stated that they're trying to get that launched a little earlier, perhaps in mid Q4. Most of these studios have extensive experience in advertising, so they're well equipped to do a pretty thorough upfront and secure all the advertisers that they need to. We recently had an advisor call with an expert in advertising, and their take was that Disney entering the AVOD market, that's advertising video on demand, doesn't really move the needle too much because they're so experienced in it already. They already have everyone in place. Netflix had partnered with Microsoft to enter the AVOD space. So Netflix is obviously very new to advertising. Microsoft has some experience, but limited compared to the other studios. So Netflix is going in, having never been interested in advertising before, having a huge portion of overall viewership on streaming. And so we've been seeing reports that they're asking as much as $65 in CPMs. Now that's compared with HBO Max, who has a high, the industry high previously of $50 CPMs. And that's
What's
higher than
CPM? What
Oh,
CPM stand for?
that's cost per impression. So
Okay.
it's just how many times you see each person sees an advertisement, and that's the price that the advertisers are paying to get those ads across eyeballs. So HBO Max had, asking for the previous industry high of $50. Netflix coming in, apparently asking for $65. Now our advisor said that's reasonable. Everyone's clamoring for Netflix ad spots, and they're only going to offer about 4 minutes per hour. So it's really, really tight.
So they're making,
and there's pretty high demand. As that expands over time, their inventory availability expands over time, that CPM should come down a bit. But according to our advisor, we think Netflix is pretty well positioned here. And we do have a buy rating on Netflix. Our $280 price target now does not account for outsized contribution from advertising. So if there is outsized contribution from advertising, there is upside to our price target.
And it just, I don't know is it kind of late to the game here on the advertising thing? I mean, you look at something like, Meta and Google and those stocks. Do you think that it's, maybe a little bit late to the game here? Or you think they're going to be offering people some new eyeballs?
Yeah, so I think one of the main concerns for advertisers is that on social media, most people use social media on their phone. And with the phone, you have the IDFA concerns. That's, really impeded the advertisers' ability, like cookies. Those are, largely going away. So what do advertisers do to really track their advertising data? So shifting over to streaming, where people watch on TV and don't have the IDFA concerns, the advertisers are reaching the similar or same audiences with better tracking capabilities mainly. And so that's where a lot of Gen Z millennials are in streaming. And Netflix has been kind of that walled garden where you just, those advertisers have never been able to get in, and so much viewership there. So being able to get in front of those viewers could be really beneficial to the marketers. So I don't think they're late to the game at all. I think they're coming in at a very opportune moment.
Yeah, I'm looking at this Netflix chart here, and I see the August high at 251.99. So far the September high 250.49, and then I just look at that bottom right chart, and boom, it just seems like you get a sustained bid over 250 here, and maybe your 280 price target will come into play. Also throwing in some good, relative strength here too, with considering what it's done since the that CPI data. You can see this big drop here. That was last Tuesday when we had the CPI data. I know it it has been getting some analyst love as of late, and also you talking about favorable about Netflix. I believe I'm going to track Mr. Pachter down too. Before I let you go, have you seen any good movies?
I haven't seen The Woman King yet. I'm interested to see that one. That looks really good.
Okay.
There's not a whole lot out right now, but I'm really looking forward to Q4. There's a lot coming out in Q4.
Yeah, they always like to do that, like Thanksgiving and Christmas Day, and roll things out for that. And I know you have a little one. Has there been any movies that's you're catching? I think it's a boy, right? His attention.
Yeah, I have a boy. Yeah, he liked over the summer. He liked The Bad Guys, Lightyear. We went and saw Minions, and there was a DC Superhero Pets. DC League of Super Pets. That was really fun. We actually saw that one a few times.
All right, so, I'm going to let you go.
Lots of kids content.
Okay. Been a while since I've been to a kids movie like that. But
Yeah.
anyways, we've had just a nice long interview here with Alicia Reese, and she's Executive Vice President, Equity Research over at Wedbush Securities, and give us some optimism here on where we did get some good macro news overnight, and then everyone is waiting for the next interest rate hike. But it's good, and I got some nice comments in here. Thanks for your look at streaming stocks as well as the entertainment industry, and we'll get you back on again soon.
Sounds great. Thanks, Joel. Have a good one.
Okay, all right. Zen bullish? No, I am not long AMC. So never have and probably never will. We're trading up 21 handles here on a day where with the kind of macro news that we got, you think we might trading in the red or deeply in the red. That's certainly not the case yet today. I just want to review a couple stocks here while you guys let's get loaded up for some ticker time here coming in. We got a few minutes left in today's show, so we could do definitely. We didn't get to do much ticker time with Triple D, and best wishes out there to him, and hope he feels better with that positive COVID test. They'd probably pick a great day to work them hard, but I did. This just real quick. I'll get to some of these stocks, and let's just look at these defense stocks. General Dynamics, still not much going on. This is breaking out over 230. So I'm looking for a pullback to the 230 area. If you're looking, you did get to 233. Pre-market, that's your pre-market high right there. Got something on the dailies for you there at 33.64. If you're looking for some confluence between the daily charts and also the pre-market action, there's a target for you above that. You get to 230, 237.41. RTX has kind of been the laggard. We talked about Raytheon Corp catching a little bit of a bid. That got just a tad over 87. Do we have anything on the dailies to confirm that is a decent area? We sure do. 86.95. That was your high on September 15th, and the strongest one, looking good here, but pulling back is more volume coming into LMT. This as it makes another attempt at the all-time highs. So looking at some stocks here, and Aviator One, haven't seen you in a while. Good to see you. Boom, boom, boom. That's not big spike yesterday. Don't know what the news was. You're down 44 cents. You got to look at the mark. You see resistance in the mark. You're going to need some more good news to get this one back up. So I'm looking at resistance, support, yesterday's low, too far down there for me to take a stab on that one as potential support. Quebec is asking about KMX and CarMax. Boy, problems there. New low for the move yesterday. Went down and made a new multi-month low here. So the trend is certainly not your friend today. What I've just noticed in this one is that if it wants to rally, it's probably going to put more than one low in at this area, right? Because you look just going back short term. Well, now that double bottom came out, but this double bottom held. Nice rally up. Only one low in this area. I'm not really seeing anything in the monthlies to confirm this one. You took out the October 2020 low. Boy, that was a lot of monthly lows there. 85. Maybe on this one, instead of trying to pick a bottom here, maybe if you could get back above that 85.5 level, where you broke down, those were the old monthly lows. Try and buy this on strength. If you're looking for monthly, I don't want to give you this 69.41. That's quite a ways away. So that is a look at CarMax for you. Real quick, I know someone on Twitter was asking me about NVIDIA Corp. That's trading up 93 cents with the market today. I always talk about this being a real streaky stock. And unfortunately for NVIDIA shareholders, a lot of the streaks have been to the downside. You had a 3-day losing streak followed by a 2-day winning streak. Came back a little bit yesterday. My key number for this one today would be the pair of highs. And the pair of highs from your last two sessions, that comes in at 34.63 and 34.83. So there's a double top. That's what you got to clear. If you're looking for support and trying to pick this up a little bit on the cheap and lead on the low in the move, 131.76 was the close from yesterday. So we'll keep an eye on that as a potential support point. Good old Martin Contreras here coming up with BA. That's Boeing. Boeing, what do we got? You got some news out of that yesterday, which was positive news. You rallied on it, trading up a little bit in the pre-market. It looks like you're going to easily fill this gap here at 147.28. Where did it close on that day? Well, I'd say looking for another target on the upside. 149.78 would be your 4-day close. That's almost $3 away. If you really want to have a big target today or over the next couple days, 153.45 was your September 15th high. All right, trying to get to some more stocks here. I did see from Jay Rice that GWW is boosting guidance here. Whew, that's up 5 stocks, $5. Not much volume here, trading at 536. Let's see what this pesky high is here. 536.35. If you're looking for some more follow through on the upside, that was your 2-day high. After that, my next daily high comes in at 550.44. Let's see, Three Tomatoes. I kind of like that name. Bank of America. Boom. This one we've been keeping an eye on here, and out of a lot of the stocks that we've looked at, I still just can't get back out of my mind this whole consolidation period that you had between 33 and 34. And then you broke down through the lower end of the consolidation, and you held a nice rally. And now the top of the consolidation range is coming to be supported here. So Bank of America not looking too bad. If you look 34.32, probably got to wait for this. If you want to buy it on strength, 34.90 was your 4-day high, 34.87. Sellers came down a little bit yesterday to 34.78, but another consolidation period going here. But on the positive end of things, which was the upper end of the consolidation range, is now finding support. So there it is, 927. I'm going to hop off here for the open. Let's see here. I see we'll finish things up with SHOP, SHOP. Boom, boom. We know where the support is, trading up 18 cents. I think buyers have come up a little bit here. Off that 30 level, kind of hawking 31. 30.79 was yesterday's low. May get a look at that today, but the real support is in that 29 to 30 area. All right, folks, 928. I'm going to hop off. Thanks for joining me today. I'll be back at 10:30 with Rob Friesen for pre-market prep with stock odds and talk about probability-based trading and also some hedge trading. Great being with you all this morning, and good luck out there.